All right, well, starting on that note then this morning, let's also welcome in Ben Emons, who's joining us for a take on what we saw out of that FOMC meet. Ben, thanks so much for joining us. You just heard Nikunj kind of put things into context. What was your key takeaway from the meet this time, and are you viewing this as a big positive for markets?
Good morning, and thank you for having us again. It's definitely a positive because what it means, this language, what we call the enhanced forward guidance, the powerful forward guidance, essentially you leave any surprises out for the next 3 years, right? It is quite unlikely that we're going to see a sudden change in policy in that time frame, at least at the point where we are today. And so for financial markets, this is a good environment because if that's controlled and if there's stable interest rates, then it also means that deficit financing will not be an issue, right? So there could be continued fiscal spending when there's an agreement. And in addition, as your colleague outlined, if there's sufficient liquidity, there's lots of alternatives and there's a lot of incentives. And if rates are unchanged and near zero, to look for alternatives in the marketplace. And that could well be in foreign markets. It also could be in what we call now the reopening sector, meaning the other part of the economy that got hit by the COVID crisis that now becomes really attractive as we go on with the recovery.
Okay, so that's interesting. What is, according to you, the kind of pace of recovery that we're going to see the other parts of the economy, as you also just touched upon? When do you actually see that happening? Trump's been talking very confidently about a vaccine being out even by October and delivered as well to people in time. Do you feel that it's a realistic possibility over the next few months, at least in the US?
Yeah, it's definitely an important assumption for where we go from here in terms of the economy, because of course, social distancing and masks are starting to pay off in terms of like that the economic recovery and the reopening of the US economy is becoming more sustained. But to get the resilience of the reopening, meaning that the reopening can go faster and more parts of the economy open up, the vaccine is essential. And so there's a lot of anticipation, a lot of expectations about the vaccine, when it will be delivered. There's a big political message now about it. But I think for financial markets, what that means is that the recovery is likely not going to be disrupted like we saw in March, because as much as we may see another virus resurgence, which is very likely or could well happen, there's no appetite for the political environment here to shut down the economy again. In addition, the economy already is adapted to this new COVID environment. And with this Federal Reserve policy now not delivering any kind of surprise or sudden change and allowing financial conditions and liquidity to be really flowing and accommodative, then there's a lot of, let's say, what we call runway for the recovery to take off. Now, we still have different steps to take. It includes a conclusion in Washington, D.C. about the fiscal package. And as you mentioned, we should have the vaccine being concluded too sometime in the next few months. The market is clearly anticipating that, but it's also something of the future. So whether it happens before year end or in next year, I think markets have taken comfort that the solution of the crisis is near and the COVID environment will change and therefore more economic recovery.
Sure. Ben, great to have you on the show. Thanks as always for taking the time out and speaking with us this morning on what the Fed has done.